Hello, I'm Christopher Slaughter from APSCC. Welcome to the latest edition of our APSCC 2020 conference series. Today's session will be on the space economy and investment trends, and it will be presented by Carissa Christensen, who is the CEO of Bryce Space and Technology in the US. Joining her for a discussion after the presentation, which will effectively be a state of the industry as far as the satellite industry is concerned. Joining her after that will be Greg Daffner, who is the CEO of GapSat and the president of APSCC. So please join me in welcoming them to the webinar.
Carissa, it's great to meet you. Is this your first time joining an APSCC conference?
I believe that it is, and it's an absolute pleasure to be here, Greg.
Well, welcome aboard. And before we get started, can you tell us a little bit about Bryce and how you work with clients, and particularly your work here in Asia?
Bryce is an analytic and engineering firm focused on space and aligned and related technology areas. We work with a variety of clients through a variety of mechanisms. We serve government agencies as providing ongoing support to help manage programs. We conduct studies and analyses, and we produce reports and publications, many of which are on our website, and most of which are fully available, not behind a paywall. Really, Bryce's core identity, our core value is evidence-based analysis to help make good decisions.
Cool. By the way, where did you get the name Bryce?
It's my middle name.
Oh, fantastic. Well, then, without further ado, take it away and give us your thoughts on the industry.
Thank you so much. So I'm so pleased to be speaking today about the space economy and investment trends. I'll try to provide some broad framing as well as detail, and also point to additional data resources that may be useful. I am going to, so we've talked about Bryce already, a little bit more detail on Bryce. And again, our focus is non-advocate, data-driven analysis across the global space economies, economy, looking at all countries, looking at all sectors, again, to support good decisions. I'm going to start by talking about the overall space economy. This is a construct that we use frequently. It's very useful. It is designed to paint a picture of the total space economy and to provide insight into relative proportions. So looking globally at satellite services, at satellite ground equipment, at launch manufacturing and government budgets, the global space economy is around 370 billion US. There's an additional segment of the space economy of downstream applications related to GNSS capabilities, to some extent related to remote sensing, that enhance that number, and another 10 to 20%. But looking at this relatively tightly defined estimate of the space economy, there are a few important notes, I think. One is that the space economy is driven by the satellite industry. And that is, in this community, I think, well understood among, for example, US government policymakers who control substantial budgets for exploration, for military and defense activities. The significant global role of the satellite industry and its proportions compared to government budgets is not as well understood. So that is a point that often comes out when we're using this for briefings. Another proportion point that I think is highly relevant is to look at the degree to which value-added satellite services and ground equipment overwhelm the value of the launch and satellite manufacturing markets. Launch and satellite manufacturing are absolutely critical, and none of those services applications would exist without them. However, the large markets, the markets that approach $100 billion US, are value-added services in direct-to-home television, in GNSS products and services. And then finally, I do think it's interesting because there's so much discussion around emerging space markets, commercial human spaceflight, even manufacturing in low Earth orbit, that is a very, very tiny proportion of the global space economy at this point. Certainly there's expectations that that will grow, but it's still less than commercial human spaceflight, for example, less than $2 billion. So, and then finally, the point that I would make is that the space economy is largely a digital economy today, and will likely remain so for the foreseeable future. So before we go into detail, and I'll unpack each of those areas, talk about the trends that we're seeing, I wanted to talk a bit about a topic that's on all our minds, and that's the impact of COVID-19. I'm showing this slide and several others, which are from the Satellite Industry Association's Satellite Industry Indicators Report, which is produced by Bryce. That is a proprietary report to SIA. SIA releases an executive summary and sells the full report. SIA has very generously allowed me to use quite a few slides from the full report for this briefing. So the COVID impact on the satellite industry to date has and on space activities more broadly, has generally been moderated by the fact that space and satellite activities are often regarded as critical services or critical infrastructure. And so companies have been able to operate and remain open in many nations. We've seen, looking at the specific segments of the industry, we've seen manufacturing processes slow due to requirements associated with operating in factories, social distancing, the need for cleaning. We've seen ESA, we've seen a number of governments, we've seen prime contractors accelerate payments to mitigate supply chain impacts. We have seen in some nations that lower tier suppliers are more significantly affected because they're not so clearly identified or aligned with the critical infrastructure. And so that has had a ripple effect in some cases. Satellite services generally has seen an increase in demand associated with broadband connectivity, although some limitations there in meeting that demand because of the challenges in deploying teams to installation teams, and certainly a decrease in demand associated with the profoundly changed aviation, energy, and maritime markets that we're currently experiencing. Generally speaking, operators have reduced revenue projections in those areas. We've also seen some degree of increased demand for pandemic-related imagery, geospatial data, and satellite data that may help track pandemic activities. On the launch industry, generally speaking, we have seen launches continue. Where international travel is required, we've seen limitations. Obviously, we've seen that in Kourou, for example, with the Ariane vehicle. And we've seen quite a limited impact on vehicle availability. Either production lines have remained open or there have been units in stock. Launch providers are acting to sustain the supply chain. So to date, we've seen a fairly robust launch rate. On the ground equipment side, we've seen sales, distribution, installation affected by travel restrictions, and also manufacturing of smartphones and other GNSS-enabled devices disrupted, and just a significant reduction in the sale of smartphones. So I'm going to talk about trends that we are seeing, that we've been seeing over years, and recognizing that there's this moment in time disruption from COVID. These trends are ongoing. And the first I want to talk about is the changing industry dynamics in the satellite industry and the really extraordinary degree of increasing productivity and new capabilities in all segments. And this is juxtaposed on, in some segments, slow revenue growth flat markets, even slight decreases in those markets. So you've got a top line revenue that may be growing very modestly, although some areas of top line revenue are growing more rapidly. Underneath that top line revenue is dramatically increased capability for the same price. We're seeing that in manufacturing. We're seeing that in launch. We're seeing that in satellite services. We've produced a series of slides that's in the SIA report that speak in some more detail to the way in which productivity has increased and capabilities have expanded in manufacturing, launch, services, and ground segment. And the result of those expanded capabilities is that end users across all economic sectors, consumer, industry, government, and not-for-profits, globally experience increased productivity, have access to new capabilities, which drives economic growth, increased safety, enhanced security, and we are moving in some areas toward a greater pathway towards space sustainability and space as an enabler of terrestrial sustainability. And so let me speak to that in a bit more detail. Satellite manufacturing, we have in the satellite manufacturing segment, we are seeing more capable and lower cost geosatellites. Certainly electric propulsion has been an important factor there. We've seen an increase in throughput per kilogram launched by a factor of 6 times since 2013. We've seen the deployment of high throughput satellites, which have driven that increase in throughput and dramatic decrease, an 80% decrease since 2013 in the cost per unit of throughput for communication satellites. We're seeing flexible payloads and software-defined payloads, modularity that enables responsive build, and of course, we're seeing initial LEO broadband deployments currently underway, which may enhance GEO capabilities and may, in some cases, although generally more marginally, compete with GEO capabilities. We're also seeing improved capability and the innovative application of small sats. Broadband systems, AIS systems, Internet of Things, machine to machine, new types of imaging. We're seeing new manufacturing facilities that's very noticeable in the US. Investment in small sats specifically of more than $100 million. Obviously those small sat systems, we'll talk about those, are shaping many aspects of how we think about the future of the satellite industry. And finally, we've seen the first GEO life extension mission executed. We've seen both a life extension through to address a satellite running out of fuel, and also moving a satellite, changing in orbit. And so that's so interesting to me because, like launch reusability, for example, and a number of other accomplishments that we've seen in recent years, on-orbit servicing has been a hope and an aspiration for literally decades. I've seen so many studies and trade studies and forecasts and analyses. And so it's really very exciting to see GEO life extension actually occurring in the commercial environment. Looking at satellite services, there is dramatically more capacity in orbit at a decreased cost, that we're seeing enhanced capabilities in terms of mobility. In-flight and cruise ship connectivity has obviously been a growth driver in recent years and is obviously a significant challenge in this moment currently. Faster broadband and new broadband subscribers since 2010. We've also seen a dramatic increase in the number of remote sensing choices and capabilities, more than 30 times the number of active remote sensing satellites as we had in 2010. And really, the emergence of small sats on orbit initially was driven by remote sensing satellites. Also a variety of new modes of Earth sensing and space sensing, and the increased fusion of data analytics with imagery. very much perceived and viewed as a driver of growth, the data analytics fusion with imagery, and I think still perceived as a driver of growth, although that market, I think, has evolved a bit more slowly than perhaps was expected. Looking at launch, more affordable launches, really since 2000, launch prices have been coming down, and on a price per kilogram basis, on average across active vehicles, that price per kilogram is down about 34%, and some vehicles have seen a more significant drop. We've also seen, as a result of largely of SpaceX and SpaceX's effective pricing and innovative capabilities, an increase in US launch market share. We've seen overall increased launch activity. We've seen some increase in the number of launches, although that hasn't been a steady trend. What we're really observing is more satellites launched per year, and that's driven by small sats, and I'll show some data that expands on that, and more satellite upmass launched per year, so larger, more capable vehicles. And finally, we're seeing more launch choices and capacity becoming available routinely. The routine use of reusable launch vehicles, as I mentioned, is a very significant change. Increased rideshare opportunities, which provide smaller satellites with low-cost access to space, new small launch vehicles, operational and planned, and those small launch vehicles tend to be more expensive on a price per kilogram basis, though less expensive on a price per total launch basis. And so there are really particular niches in which they fit well. And also direct competition between those small launch vehicles and large launch vehicles. And we're also seeing multiple next generation medium to heavy launch vehicles under development globally. And finally, looking at ground equipment, we are seeing, of course, growing on the move connectivity, 6.4 billion GNSS satellite-enabled smartphones and other devices in use, mass-produced chipsets resulting in lower costs, and a significant increase in numbers, 56% over the last 5 years. We're seeing broadband and satellite radio installations on the rise. We are also seeing television viewership changing from traditional models. That is happening with regard to terrestrial television distribution, as well as space-based systems. And that is having an effect on space, on satellite video television markets, where we're seeing a flat or even slightly declining rates of growth. So looking now at the revenue picture for the satellite industry, this is the 2019 report. And again, we will see certainly some disruption in these trends in 2020 associated with COVID. We can talk about that a bit. Looking at the 2019 report, satellite manufacturing was $12.5 billion, with significantly more commercially procured satellites than in 2018, mainly smaller, lower cost satellites. We saw the deployment of LEO broadband satellites and more affordable GEO satellites, as we've talked about. I think it's interesting to note that in early 2020, we saw 100 more commercial satellites launched than in 2019. So that curve is really very rising rapidly. With regard to satellite services, total revenue is about $123 billion. We saw growth in value-added telecom markets, in broadband and satellite radio, managed networks and mobile services, as well as remote sensing. Significant new capacity deployed, and I'll speak to that in more detail. And overall, a relatively flat, actually a slightly declining number there because of the dominance of those television markets that are flat or slightly declining. On the launch industry side, about $5 billion in revenue, with the US maintaining the largest share, the second largest number of orbital launches over the last 5 years. I will note on launch and on satellite manufacturing that this analysis recognizes the revenue for a satellite and the revenue for a launch in the year of launch. And that is an analytic construct to support traceability, but it's certainly a slight distortion of reality because, as this audience will well know, satellite manufacturing contracts and launch contracts are structured in multiple years prior to launch. And so the total numbers that we show here tend to be a little uneven, because if there's a very high cost launch in 1 year, that the total value of that satellite is captured for the manufacturing sector in that year, even though a very high value, very complex satellite would be stretched backward over multiple years. And then finally, on the ground equipment side, about $130 billion in revenue with growth in GNSS applications and network equipment. And as I mentioned, this number focuses on the GNSS hardware, the GNSS-enabled chipsets, or standalone dashboard devices. There are other applications, downstream applications that are not counted in this total. So looking at the satellite networking context, so I've been talking about the change in the number of satellites and what satellites on orbit are. There are 2,460 active satellites. That's our count, as opposed to an estimate. That count involves making determinations about the end of life and operational status of certain satellites. So there's a bit of art there, but it's a fairly reliable number. And the allocation of satellites is about a quarter commercial communications, about a quarter, a little bit more remote sensing, about 20% R&D satellites. And then the mass distribution is so different from what we have historically seen, where about half of the satellites on orbit, more than half of the satellites on orbit, are under 600 kilograms. And let me, in fact, show you how that has changed. So the orange line here is satellites from 2015 to 2019, and that is an extraordinary increase in the number of satellites on orbit. Of course, if we looked at total mass on orbit, that increase would not be, or total value of assets on orbit, that increase would not be nearly so dramatic, because what we are seeing is the deployment of many, many small satellites. And small satellites, there are varied definitions. Bryce, in its analysis, tends to use under 600 kilograms for small sats. Really, the most transformative satellites, meaning those where there are many, many of them, tend to be on the lower end of that range. I did speak to new satellite capacity, and I really want to highlight that. This chart shows the high throughput satellite capacity compared to wide beam in terms of the total capacity on orbit. And you can see on the left, the blue line shows that steady increase in capacity on orbit, and the cost of that capacity from a manufacturing standpoint. Now, this is not the sales price, this is the cost of manufacturing those satellites. That cost has dropped dramatically. And so those two factors really are, create a bit of a transformation in geosatellite telecom. And this has been a very useful chart, in that many of the audiences that I have briefed it to, and that SIA, I believe, has had the same experience, or just not aware of this transformation and how dramatic it has been. So we started by looking at the pie chart, and this is a simplified version of that, again highlighting the proportions and relationships of the global satellite industry. So I'm going to move forward and talk about our 2019 results. So in 2019, we saw global satellite revenues of $271 billion. And you can see the proportions of each of the key segments on the right. Satellite services dominated by consumer and really dominated by direct-to-home television, with fixed satellite services approaching 20 billion US. Satellite manufacturing dominated by the US, and really that tends to be driven by high-cost US government satellites procured by government agencies from US manufacturers. With regard to ground equipment, very much dominated by GNSS chipsets and devices, and satellite launch around $5 billion. And interestingly, while a significant number of US launches, because those launches have been lower cost, the US has a slightly smaller, less than 50% share. Next slide. So I've spoken about the satellite industry and the established institutional industry. We've heard quite a lot over the last several years about new commercial space capabilities. And really that conversation has been driven by a new type of investment in space. For some period, it was referred to as new space. I think that that's not a very helpful, it's not operationally useful. It's not, I don't think that some of the most innovative technology companies in the world really are appropriately called old space. So Bryce views the influx of investment into new companies through the lens of venture financing, venture and super angel financing. And that's been a very useful operational definition because it captures companies that do operate with a different attitude toward risk because their investors have a different attitude toward risk. Venture investors, as you well know, tolerate a high degree of risk. 3 and 4 venture funded firms fail. That's not space, that's across the board. And that's data driven from a Harvard Business School study a few years ago. And anecdotally, 1 in 10 venture funded companies really drives portfolio success for venture investors. So that's a tolerance to failure that's not, that's for which there's no equivalent in an enterprise level institutional operator. And so Bryce has conducted a study we update it every year called Startup Space. It's fully available. It's about 50 plus pages of detail. So you're welcome to download that. And I hope that it's useful for you. I'm going to share a few slides from that study. One, and this is so interesting to me, the absolute dramatic increase in venture capital. And again, we're considering super angels and billionaire super angels in that number in space since 2015. And really that has been enabled by smaller satellite form factors, in that venture capital typically is not in the billions of dollar range. It's in the millions or tens of millions or hundreds of millions. There are certainly exceptions, some very well-known exceptions. And so the ability to establish an operational space company, at least in its initial phase, for a cost that's much less than billions of dollars, that's in the tens of millions of dollars, attracted venture investment initially to remote sensing satellite systems, and then a different level of venture and super angel investment into communication satellite systems. There's also a thread of billionaire investment in launch that has really been influential, partly because of the increased availability of launch capability, partly because of the competitive jolt that provided to the launch industry, and partly because the involvement of those highly successful entrepreneurs opened the door to other venture investors who then began to consider space investments. Looking at what that total investment was in, again, this is investment in any space company that has at some point in its history received venture or angel funding. And in 2019, that number was nearly 6 billion US, a significant increase, almost 2/3 from 2018. Now, in 2020, we saw a slowdown of investment related to COVID. We're starting to see that pace, that activity ramp up. We will certainly see a total number, we anticipate seeing a total number less than 2019, but the investment does continue. In 2019, 135 companies, and again, this is received investment. This is companies, this list of companies is those that consists of those that have announced their existence, and some continue to operate stealth, and have received outside investment. So there are certainly more companies than are listed here, but this is comprehensively captures companies that meet those two filters. 328 investors in 150 deals. The major players, so 4 companies, accounted for nearly 70% of that investment in 2019. Those companies were OneWeb, which of course received significant investment from SoftBank and has now restructured and is moving through a bankruptcy process and has seen an investment by, for example, the UK government. Blue Origin, the company owned by Jeff Bezos, who is, as far as we know or has been reported, its only investor. SpaceX, which is by far, from a valuation standpoint, the venture space industry's biggest success story. SpaceX has continued to raise capital and develop new capabilities, and Virgin, which is developing both the Virgin Galactic space, suborbital space tourism capability, as well as Virgin Orbit small satellite launcher. Over the last 5 years, 50% of this total has gone to SpaceX and OneWeb, and those have been those very large investments. Who are those investors? Many are in the US. The US was the nexus of both the most startup companies and the most investors, but we have really seen that trend change and evolve. So 506 non-US investors across 41 countries over the time period that we've been tracking. China is home to a significant number, well over 100. Followed by Japan, the United Kingdom. Those are the most significant number of investors. And then also India, Canada, Israel, Spain, and Australia have a significant number. And again, this is a list of investors who have invested in space companies and made those investments public. So in each of these cases, there are certainly more, but we can document these. Finally, in our 2019 report, we included a special section on China, looking at Chinese investment in startup space ventures. The total investment has been relatively consistently with what we've seen elsewhere, a significant proportion in launch, and then satellite services and satellite manufacturing. China is surpassed all countries other than the US in 2019 in terms of the number of companies based in China receiving financing, the amount of money invested, the number of deals, and the number of participating investors. Of the 79 non-US space ventures that received investment specifically in 2019, more than a quarter were located in China. And then that was followed by Japan, India, and the UK with 6 startups each. In 2019, Chinese startup ventures received more than $300 million, exceeding other non-US countries. Japan was second with $130 million. And overall, 31 space startups are headquartered in China, That's about 21% of all non-US space startups. Finally, I want to show this slide, and this data is in our report. If this is of interest, I would urge you to download the report because this is a bit difficult to read, but it's very rich data. It's very rich data in a number of ways. So what this shows are the most active space venture capital firms. And I think that this is useful from the point of view, certainly of startup firms who are seeking funding, certainly from the point of view of entrepreneurs who may be looking for their next round, and also from the point of view of large established enterprise satellite operators and manufacturers who may be seeking innovative partnerships with venture funded firms or with investors. And so this list shows, first to the far left, highly space-focused VCs, that is, VCs that have invested in more than one space company, to the left, and to the right, the companies they have jointly invested in. And so I think in a way, this is a bit of the, the list of space startup royalty, because these firms have attracted investment from multiple space sophisticated venture capital firms. To the right at the top, you can also see the venture capital firms that have invested in 3 or more space companies, and with an indicator of how many companies they've invested in. And then also at the bottom, venture capitalists that have participated in multiple space startup deals since 2000. And of course, several of those deals may be associated with the same company. So I hope that that this is useful to you. I think it's an interesting view of the venture capital landscape and how it views space. And so with that, I'll end my prepared remarks, and once again, say thank you for the opportunity to speak about this topic to this audience. And I look forward to some conversation with you, Greg. And Greg. Greg, you're muted.
Ta-da. I was saying thank you, and you covered a heck of a lot of material in a very short time. Pretty much the A to Z of space and satellite technology, communication, development. So I'll jump right in here. This is an election year in the United States. And the question really is, what's the likely effect on the space and satellite industry? If the Democrats win, and who knows, do you expect to see some meaningful changes to Space Force or to DoD, intelligence, NASA, NOAA programs? And just because rather than my asking them piecemeal, if we have a Biden presidency and or a Democrat-controlled Congress, is that going to alter the U.S. government, in your opinion, government involvement in engagement with our industry over, say, the next 5 years or so?
So it's a very pertinent question. I would say that historically in the U.S., space has bipartisan support. It is not a Democrat or a Republican topic. Every administration puts its own stamp on programs, and so we will certainly see some changes. I think, however, that there are strong indicators that a Biden presidency would value space from a commercial standpoint, as well as from an exploration standpoint, as well as from a national security standpoint going forward. And certainly a Trump administration, I would expect, would continue to place a very high value on space. Trump administration has been very focused on space. The vice president chairs the Space Council in the US. Space is a high priority for this administration. An indicator of how a Biden administration might approach space can be found, I believe, in an op-ed piece produced by Sean O'Keefe, who was a former administrator of NASA and held quite senior positions in the Defense Department, and John Grunsfeld, Dr. John Grunsfeld, held senior positions at NASA. And they produced an op-ed piece about a month ago talking about how positive a Biden presidency would be for space. So certainly, I interpret that as signaling that space would remain a priority.
Makes sense to me. And you're right, it is bipartisan, and let's hope it stays that way. But continuing on the political angle for just a moment longer, to what extent is and will the Chinese new space growth that you were talking about affected by the US-China trade tensions that have been, if anything, getting worse?
I'm not sure how much it will be affected because with regard to space activities, there has always been, there have been for many years, for decades, limitations and constraints on US-China trade. So I think we will see a continuation of that situation.
Okay. And sort of broadening across Asia, and I know you don't like the term new space, but you did talk about a lot of the huge investment that's taking place in the US in new space areas. But you also pointed out that there's even a surprisingly enormous amount going on outside of the US. So the question I put to you is, how do you see the momentum building in Asia Pacific in this arena?
It's very interesting. A few observations. With regard to venture capital, the U.S. I think the U.S. has a very mature, globally recognized venture capital community, culture, and so on. I do think the U.S. lacks an advantage that many nations in the Asia Pacific region do have, and that is an ability to and a facility for targeted government support to drive economic development in particular industry areas. The U.S. typically eschews industrial policy, is not structured in terms of driving economic growth in a targeted way. And so I believe that there are opportunities for success in specific areas, and we're seeing countries focus on space as a driver of economic growth and also of countries seeking to enhance their venture investment and venture capabilities, as well as bringing government grants and funding and risk reduction funding to the table. And that's driving the emergence of commercial firms. Japan certainly is a nation where we've seen quite a few emergent commercial space companies who continue to raise money and are taking positions on the global stage. Japan is by no means the only example, but I think one that comes to mind.
Well, if you were to turn to page 3, just to follow up on the point you're making about eschewing industrial policy in the United States, I can't help but think that the US government, in a variety of forms, guises, agencies, and missions, has been consistently, and this is just a snapshot, outspending the whole rest of the world combined on various space activities. And one of the complaints that we get repeatedly in trade disputes is that, in fact, the US has a very heavy finger on the scales of level playing field competition. And that, in fact, there is a not so secretly disguised industrial policy very much at work. You don't believe that, though?
So I don't, so I'm speaking as a longtime policy analyst as opposed to someone commenting specifically on particular trade negotiations or discussions. And generally speaking, I think it is absolutely the case that the US does not define and implement industrial policy in the way that many other nations do. That's just kind of a reality. The US expenditure is absolutely very large. If you look at this pie chart, roughly half of the world's government expenditure on space is the US government. So that certainly is a very substantial proportion. I will note that another interesting element, which is there are relatively few nations that operate across the entire space ecosystem. With regard to commercial satellites and commercial operations, that's perhaps the most broadly experienced. Exploration programs, which is a big part of the US budget, and then national security and national defense considerations, which are becoming more important to many nations. India comes to mind. So obviously China operates across all those arenas, and India comes to mind as a nation that operates across all those arenas as well. And India is interesting because its total budget relative to China, relative to the US, is smaller, but it has a robust presence in all of those sectors across the entire ecosystem.
Okay, changing subjects to broadband. Page 7, you talk about there were 1.6 million new satellite broadband subscribers over the last 10 years. And you noted that there's 3 times more satellite capacity in orbit. And then on page 13, you talk about an increase in broadband capacity from about 4 terabits today to 30 terabits by the end of 2024, which is only 3 years from now. But anything's possible. Question for you. I got a lot of questions, but I'll keep it simple. Do you think that the leading satellite broadband providers will be doing so in GEO or LEO or MEO?
So that's an excellent question. And of course, there's broadband and broadband, right? There's broadband services delivered to the end user. There's broadband capacity that's used for a backbone, a bit for backhaul. So it's a very complex market, and we're just scratching the surface of it. And the audience here is very knowledgeable about that market. I will say that I do think that the fundamental advantages of geosatellites are not going away. So our forecasts, our projections at Bryce tend to assume that we will continue to see an ongoing geo presence, an ongoing geo segment of the industry, that we will see a continued and ongoing, large LEO, let's say, presence, and that the real potential game changer, the scenario for the future that's so difficult to predict and really does drive outcomes, is what will happen with proliferated with large constellations of LEO satellites focused on broadband services, OneWeb and Starlink and Kuiper and the Telesat system. And those systems, typically, we do not expect to be dramatically eroding existing geo markets. And in fact, for those systems to be successful, they need to find new markets. They need to find consumer markets. They need to find rural markets. And that, to me, is an open question. The extent to which the cost of those systems can be met by revenue from new consumer markets. There are operational challenges associated with those systems. There are cost challenges associated with end user equipment. And so while without a doubt, the technical innovation and some of the emergent capability that we're seeing associated with those systems will shape space activities in the future, I don't know that anyone can say with certainty that the business case envisioned by any or all of those firms will close as it's currently envisioned. I think that there's still a great deal of uncertainty as far as that goes.
I think you're right. Okay, so you were alluding to the difference between the kind of direct to the user satellite broadband services versus the backhaul type. I think that we've got a new version of that, though, that's taking place increasingly. And I would characterize it as developed world, which is primarily direct satellite to user connections, like what you have in the US, versus what we're seeing increasingly in the developing world, which is a hybrid satellite connected to village Wi-Fi, which then connects to mobile phones, et cetera. And I think that if these services are going to really become as broadly rolled out as we're anticipating, and to make meaning of those 30 terabytes of capacity, meaningful usage, I should say, it's going to have to expand a lot faster than 1.6 million users over 10 years.
So that's absolutely the case. And to be fair, the focus on the rollout of infrastructure, I think, will be, ground infrastructure will be more rapid. I do think that the question with those kinds of applications that you're talking about, which absolutely are really well designed to meet the needs of certain regions, the question becomes, again, what is the revenue potential associated with that construct? And is that revenue potential sufficient? Because even though large LEO constellations are built of lower cost small satellites, there are a lot of satellites. The manufacturing costs, the deployment costs, the replacement costs, as well as the ground infrastructure costs, they're all non-trivial.
Yeah, but I think the billion-dollar question is tracking antennas. Do you expect to see very low cost, consumer grade tracking antennas available for mass adoption in the LEO, MEO universe?
I think that we would say that we view that as critical to long-term business success, and eventually we will get there. So that's always the easy answer in space. Eventually we will get there. This is a technology-driven industry, but will eventually be fast enough to support the business operations of the proposed systems as they exist now. I don't know the answer to that. We are certainly seeing indications that it's challenging.
Yeah. Well, the good news is that we've been hearing that the antennas will be available by Christmas. The bad news is we've been hearing that for the past decade, so we don't really know what Christmas it is.
There are a number of, I alluded to it earlier. That is a shared experience we in the space industry have. No matter whether you're looking at planetary exploration or affordable human space flight or low-cost tracking antennas. And it's one of the reasons that some of the accomplishments of SpaceX, for example, or Northrop Grumman in the on-orbit servicing are so exciting, because they fall into that category of things we heard about every year for decades, and they happened. So they do happen eventually.
They do, and we're all hoping for them. I mean, we wish them luck. Talking about Northrop Grumman and their life extension service for Intelsat, you talked extensively about the fabulous evolution in new satellite technology, much higher bandwidth satellites with substantially lower cost bases. Do you really think that there's a substantial market for extending the operational life of older satellites still?
It's a great question, and obviously, so there are factors that say, there will be less demand, and factors that will say there will be more demand. So the ability to inexpensively deploy a new satellite with significantly improved capability, obviously mitigates against the mass value of life extension. That said, there is not one type of satellite operator, there is not one type of satellite market. And so a satellite that may no longer be ideal for a high yield slot may be attractive to a nation that is newly entering the industry, or an early stage company that's looking for some initial capability in a different location. And so the inexpensive ability, relatively inexpensive ability to move a satellite or extend its life may be attractive. In addition, as you think about software-defined satellites and the ability to deploy a platform and then insert technology into it, that then makes life extension more attractive. I certainly don't think every satellite has a life extension business case. However, there are absolutely business cases. And one very interesting area is government programs where there are unique one-off satellites which may be experiencing delays or want to extend the life of their on-orbit systems, which are operating more effectively than their design lifetime would have suggested. Then fuel-driven lifetime extension is very attractive.
Yeah, and I think one of the additional dimensions, which I think is possible at this stage, is more modular satellites. So you could actually go up there, take an old module out that was obsolete, even if it's still functional, and replace it with something which is on a hardware basis is next gen. But
I think that's exactly right. And as we think about, so one of the interesting things about the MEV is it doesn't require that the satellite design contemplate its existence. As we see an evolution of satellite design that does contemplate the existence of a servicer or a more active servicer, a robotic servicer, then absolutely those kinds of capabilities and changes will become part of the ecosystem.
Okay, we're almost out of time, but just two more questions. And this first one really gets into your approach in assessing the facts. One of the things you started out talking about was the government market, and it's a very fragmented vertical. Lots of smaller countries are developing their own space programs, but what I think we've seen is that many of these countries are much less transparent about their space budgets than, say, the US or ESA. So the question really is how does Bryce make its estimates for government budgets, especially from these smaller emerging space markets?
So our philosophy generally is that our job is not to provide a perfect crystal ball. That's not possible. Our job is to do the homework for our customers, do the homework for people who read our reports. So we, I would say, obsessively collect all the data that's been published. We conduct interviews, we ingest everything that we can, and then we build models, we make judgments, we put together estimates based on the best available data that we have. And one of the, I think, strengths of our reports and our reporting style is when we do a forecast for you, for example, we spend as much time talking about what we don't know, what the uncertainties are, as we do about what our baseline is. Because the value of doing your homework is you learn enough to put together that baseline, and you also learn about all the factors that might change it. And no company is going to make a decision about what's going to happen 5 years from now or 10 years from now with a single baseline prediction. What that company really wants to understand is what are the dynamics? What are the relationships? What are the puts and takes? What's the cause and effect? So that that company can develop a strategy to shape that environment and succeed in multiple future scenarios. And so that's my best answer is we do our homework and we come up with our best analytic estimate.
We do a lot of homework. Last question, page 11 of your presentation. You talk a lot about the substantial increase in the number of satellites over the past 5 years, 77% increase from 1,400 satellites in 2014 to nearly 2,500 at the end of last year. But you also point something out, and I think this is a nice way, kind of a warm, fuzzy way of ending this conversation. You talk about the fact that entities in 75 countries operate those satellites, and that 92 countries have deployed at least one satellite since 1957. So I would say this is pretty close to 50% of all the countries in the world. And the question is this: how important do you think it is that, particularly for developing countries, to have engaged in their own satellite and space operations? Do you think this is driven principally by vanity, a flag in space? Or do you think that there's a genuine need for these countries to own and operate their own satellites and get a piece of the action and their foot in this game?
I think the dynamic there has changed a great deal. 20 years ago, even 10 years ago, there were far fewer options for buying exactly what you need in exactly the way that you need it, whether that is a service, whether that is a small satellite, whether that is access to an on-orbit platform. So in the past, a country that wanted to experience the benefits of developing space technology, of using space technology, really had to develop some sort of national capability. There certainly also are policy reasons. I think I would not say vanity. I would say national capability, right? There's a set of missions, national missions, that are enabled by certain kinds of capability. Looking toward the future, I absolutely think that it will be a critical part of every nation's growth path to use and engage with space technology, and the opportunities to do that are so much more rich and diverse. That may be contracting for customized small satellites, that may be starting a university CubeSat program and building a partnership with a manufacturer that's going to launch a national satellite, that may be just buying services by the yard. There's so many ways to customize space programs with space policy needs that I think that some of the biggest beneficiaries of these emergent technologies and capabilities are smaller nations who now can participate much more in the way that they want to meet their needs.
I agree with you, and I think that it's a terrific trend. I think that we're seeing, and we've seen now for well over a decade, even small universities are building their own satellites and launching them. And in fact, I read the other day, because my kids are still in elementary school, about a class of elementary school kids that put together a program, albeit fairly rudimentary, but it got them involved, and I thought it was really exciting. Everything we've talked about, your presentation has been fantastic, and we've run out of time, but I just want to say, please come back and join us again real soon.
I've spent I've had many happy trips to the region, and I look forward to virtually joining you, and even better, joining you in person at some point in the future.
It's a date. Thank you.
Thanks so much.
Okay.
Thank you very much for that. Carissa Christensen, CEO of Bryce Space and Technology in the US, Greg Daffner, CEO of GAPSAT, and the president of APSCC. Please join us next Tuesday for the next installment, the third in our ongoing APSCC 2020 conference series. This one will be on 5G and satellites' role in stitching together the network of networks. Look forward to seeing you on Tuesday.